Jonathan Krinsky, Chief Market Technician at BTIG, joins me right here at Post Nice. Nice to see you in person.
Good to see you.
What do you make of this market, man? I mean, it surprised so many people. I think it surprised everybody. The fundamentalists, the chartists like yourself, you didn't think we'd be here now, did you?
No, I think last time we were here, we kind of talked about one of two things was going to happen. Either the high momentum names, the leadership stocks were going to kind of catch down to what the broad-based market was doing, or we're going to see breadth expansion and everything was going to catch up to the Mag 7. We're obviously seeing the latter. So it's encouraging on the one hand to see some breadth expansion. We're seeing healthcare, biotech have a massive breakout today. At the same time, we haven't resolved some of the extreme upside issues on some of the tech names.
Like what? Are you talking about the mega cap tech names? Are you talking about sort of the below the Mag 7 ones that have ripped a lot, that are in this AI halo?
I would say AI specifically. If we talk about the S&P 500 semi-index, for instance, if the year were to end right now, the 2-year performance last year and this year would be 125%. In the history of the semis, the only time we've seen a better 2-year performance was 98, 99, 131%, and we're only in February, so we're pushing the thresholds of what we've seen historically for that part of the market.
Yeah. What does this all tell you about where you think we're going from here?
So I think we've had to adjust the massive bearish narrative for the S&P 500. I think we're seeing that breadth expansion. I think small caps are finally starting to participate. That insulates somewhat the big drawdown. With that said, I think the biggest issue right now is kind of this factor momentum trade. If you look at something like a long short momentum index, it's just been one way to the upside because of the AI names moving to the upside, and a lot of the other names have not. So I think the risk is that some air comes out of those high flyers, and that's a big part of the S&P right now too. So I think 4,800 in the S&P is very good support if we were to get a shakeout.
Okay.
But it's clearly, I think that the breadth improvement has taken off the bigger bear picture.
I feel like almost everybody loves healthcare. Right now, including you.
Right now, it was our top pick in December coming into the year. I think it started with the mega caps like Eli Lilly, that kind of trade. Now we've seen a broadening. If you look at year-to-date performance on an equal weight basis, healthcare is the best performing sector on an equal weight basis. So it is broad underneath. And if you compare it to technology, it's not had the big kind of hockey stick move so far. So I think there's still some runway to go.
Yeah. What about energy? I have some people on the show today picking energy as one of their favorite groups.
Yeah,
I mean, it's obviously been an underperformer.
Yeah.
How should we view it now? I'm looking at it here. It's done almost nothing year to date. It's in the green, but barely.
Yeah, I think energy is just on your watch list. I think materials are actually kind of an interesting sector in the commodity space that get even less attention than energy. The materials sector just broke out to a new high after 18 months in consolidation, so we'd focus there for now. Energy will have its time if it can make a turn.
All right. What's the upside you think for the S&P? If 48 is like a line in the sand for support, or watch out, what's upside?
When you're at all-time highs, it's very difficult to ascertain an upside because there's no obvious resistance. I think 52.50 is probably a good level, but we'll see when we get there.
Okay, yes, we will. Jonathan, good to see you. Jonathan Krinsky here at Post 9.